Good morning, everybody. It's Greg Schnell, and I am here with the market outlook for March the 10th, 2018. Thanks for taking the time to join me. I appreciate you listening in on this Saturday. Lots to check out. I do want to touch off on a couple of things. First of all, the market made new highs this week, especially the NASDAQ. And when we do that, you're in a bull market. That is not a trade of a bear market. And so what we like to do is to make sure that the market is that we're on the same side of the market, and we're hitting new highs, and so skepticism should be pushed aside until that's not true, and we have to stay with the bull market. So that's a good thing, and let's talk about a little bit more about how to do that, and maybe some of the things we see going on to just at least have a feel for the bigger picture. So today, again, we've got new highs, and I want to look for long trades only at this point. There's great reasons to do that. Some of the new breakouts are happening, and I want to talk a little bit about scanning, because I know that some people are genuinely afraid of scans. So I'm going to put together some one-line scans that are really easy. One of the frustrations a lot of people have in scanning is that when you get a new high today, it shows up on today's scan. But if I got a new high earlier in the week or whatever, it doesn't show on my scan today. So they have trouble with that. So I'm going to show you a workaround on that it's very straightforward, but it's really, really easy to do. And it would help. It'll help you find all the scans over a certain 20-day period, and you can work through that. So anyway, we're going to get into that. It's a one-liner. It's no big deal. And then you could just save that in your advanced scan and run that. I think you'll find that quite nice. I do want to touch on relative strength a little bit, because obviously the technology stocks have relative strengths, and I want to make sure that people understand how to see that and look about that. If you have any questions, I'd like you to open the chat room. I'd like you to comment in the chat room. It's just Zach, our producer, and myself running this morning, so we'd appreciate if you could keep the commentary between multiple people down to zero, so that I can just quickly glance over and look and find the questions. But if there's a whole bunch of chat in there, then I can't really find questions that are for me. And if you have any questions about the book, I'd be happy to answer that. So with that, let's get rolling. We're going to go straight into Safari, and the presentation I did to the Scottsdale and Phoenix MTA earlier this week. One of the questions that I was asked about was, which part of the market do you think is currently the most interesting? And I think when I think about the most interesting, I mean the most likely to upset the apple cart or to change the direction of things. And the biggest thing for me right now is the US dollar and the currencies. Japan has just broke out of a 6-year trend line. Europe is up against a 10-year trend line, but the US dollar has recently broken into a bear market and has not been able to continue down. So usually when you break down on something the size of the US dollar, much like we saw in bonds earlier this year, when that breaks, usually it's just literally a pile on, and for weeks or months it runs. And we have not seen that in the US dollar. It's basically broken out and stagnated. So this is a market outlook I did back in 2017, 08, 03. And what we put on the chart was that we had a lower high coming in here, higher high there, and we just had to be very worried about the US market or US dollar breaking down. And so now here we have this continuation where the US dollar is breaking lower, and this is a monthly chart. The difference is that when you break these major long-term trend lines on momentum, it's pretty important that we're aware of changes in momentum. So you can see back here, this break in momentum was significant. Even this little break here in momentum was pretty major and gave you a pretty good sell signal. So at this point, it's down a long way. But the one thing that I would say about the US dollar, look at this graph here and just very quickly, first of all, the RSI is at a level it rarely gets down to, going back 25 years in terms of oversold. You can see on the PPO, when we get a percentage oscillator this big, usually the moves to the upside are rather swift. We haven't had that right now. But here we made a lower low on the oscillator, and then that really marked a major bottom. 1998, 99, obviously in the 2002 to 2005 bear market period. When we broke down, it was pretty important. And one of the things that I've been comparing to a lot is this area right in here in 2002. And the reason was because the US dollar broke down after a 6-year bull market run. So we've been running since 2011 in this big bull market. And when this trend line over here broke, it was a pretty important place to be aware of on the chart. And basically we spent almost 6 months and then we broke down. But when we broke down, we literally fell apart. This thing was just racing to the floor. And we have not done that. So when we go over here, what we see is we broke down basically for like 2 weeks, 3 weeks. And the first thing we did was we bounced back up and we've held there. Now, it doesn't mean that the bear market won't resume, but as you can see, this level's pretty darn important as a support and resistance level on the chart. And for newcomers to the show, what we mean by that is places where the market had trouble breaking through before, and then in here you can see it broke through with gusto, and it just went basically straight line all the way up, and that was for 9 months or whatever. And when we talk about breaking out, that's what we're expecting. So when it was trying to get through these highs, it jogged for a day or two and then literally kept going. When it got to these highs, it jogged for a couple weeks and kept going. Over here, we've been going almost 8 weeks, really since the beginning of the year, and we have done nothing. So to me, it tells me that the downside inertia is clearly gone. If anything, we haven't got any inertia to the downside. But more importantly, is this support level looks like it's trying to hold. So when you break above it, then you assume that those levels will be tested as support levels later on. And sure enough, the market is trying to bounce off that level now. So here we are at 88.15. These are at 88.19 and 88.71. On something as big as the US dollar, that's amazing that it is holding within, a half a cent. So that's really, really huge. Now, what we have down in the bottom corner here is we have a higher low setting up and a lower low in price. So I'm really at the point where I'm actually expecting a new rally in the US dollar and commodities to fail. Which is not good, because I like to do my commodities countdown show and talk about bull market activity, and there's not a lot of bull market activity when the US dollar is soaring. So these factors are all coming together, and the US dollar is really giving me angst would be the right word. And so I'm just going to show you some of the other currencies and why I think the currencies right now are the key to figuring out if we're in a big bull market for the US dollar, and then what else is going on. So here is the euro, and the point I want to make is this is a 10-year trend line on the euro, and we are struggling to get through it. Now, that does not mean anything in itself. It just means that we're working to get through it. But the problem is that if you look at the dates on this chart, 2014, that was when the US dollar started its run, and that was after QE finished up. So QE didn't finish until the end of 2014. But basically, we had a big implosion in the euro, and it broke this 3-year uptrend or whatever. And when it broke again, it moved very, very fast and built a base, and it took almost 3 years for this base to be built. Well, now we've broken out, and this 121 level is really important support and resistance. We've gotten slightly above it, but you can see that we are literally at the confluence of two very important points. One is a 10-year downtrend, and one is a 15-year horizontal support and resistance level. And the fact that we broke through it but didn't make any progress after breaking through it, again, lends itself to be very, very cautious. So we have an uptrend here in the euro, and this is a bit obvious, but the euro and the US dollar are largely correlated. When one goes up, the other goes down, because the euro makes up 55% of the dollar index. But the point would be, if you're getting a major trend change, you want to watch these major points. So We all might remember that something happened in 2008 and it wasn't very friendly. We might remember that metals, industrial metals topped out in 2011 and 12. And then because they double tested or double topped. But you saw a big breakdown there. Here we have this test of this trend line again. And now we've spent, we're into our third month of testing this trend line. And clearly the price action this week was not that bullish. We went higher and gave it all back. And when you see these wicks on the top, we refer to those as selling wicks. And the reason is because you get this huge push up and then the sellers come in and push it back down. And on the converse side, you have what we call buying wicks. And this is from a guy named Dan Gramza. But when you have this big move down and a move back up intra-week, what you see on that move is a lot of buying coming in. And so these are buying wicks and these are selling wicks, even though I agree. The price had to get pushed up, so it was a buying wick that direction. What we're talking about is the way it closed. And so this push down is important. So anyway, after trying to get back up, we had no strength up there, and really it seems like it wants to fail. Now, this first bounce off support was pretty crucial, but what we're getting into here is really a declining tops and a breaking of support on the bottom side, which isn't that bullish. So we want to be careful on assuming that European markets are going to, or that the euro is going to break out against the dollar. And so having that as a backdrop, understanding that the US dollar is right at support, the euro at that 10-year resistance line. This is it on a daily chart, and you can really see the struggle that we've gone in. So here it is, roughly January the 14th, we were at these same levels. But this big uptrend, 1 year roughly, 11 months, along this trend line, and even farther if we go back to the beginning of that year, is being tested within a penny here. So this is a pretty crucial area for the currencies. And the reason I want to make the point about the currencies, I realize a lot of us don't trade the currencies. It's because the currencies can give us a clue to bigger picture issues that are going on. Okay, let's get into the British pound, and obviously they've had the Brexit. So what you see here on the British pound is that they're very the FTSE, or the London stock market, is very close to 12-month lows. And obviously that's different than the US market. We have a big uptrend here in the British pound, and this uptrend is trying to get supported, but it also hit a long-term resistance layer that's been on this chart for years. Actually, I think let me change that. I think what I did on this particular chart was I set this red line at the day before Brexit. And so when the Brexit vote came out, this is the shakedown we got in the dollar, or in the British pound. And now we came back and we tested that level. On one of my other charts here, we'll get into the long-term support and resistance layers. But the issue here we have is that this upward trend line is very, very, the trend in momentum for the British pound looks like it's ready to break here. We have that same look on the US dollar, that its trend line is ready to break. Now here's the Japanese yen, and the point I want to make on the yen is that it has a series of rising lows in momentum. It's above zero, so that's very positive. And typically this line in the background here is gold, and you can see that they're pretty tightly correlated over the years. The yen topped when the commodities topped, and they've been riding down together. Now they've all been base building. And here we have the yen breaking out to new 52-week highs, but gold didn't do that yet. And so gold's kind of got a 4-year floor here, and the yen has a little bit of room to move up. It could move up another 5 cents and still get back to the 2016 highs. But I think one of the critical points on this chart is this downtrend line that goes on for 6 years, and the yen has just broken out of that. It is not doing the same thing as the euro and the pound and the dollar. It's actually continuing its move higher and higher every day, or every week. And so higher highs and higher lows, not like the dollar where it's just stalled at a certain level. so my point would be that one of the currencies is not behaving like the other currencies, and that is starting to be more critical. So with that, I want to watch to see if the changes in the currencies are going to start creating changes in other parts of the market, bonds, commodities, equities, and just see what's going on. But one of the fears I have is that if the currencies, if the US dollar is going to start a new bull market, that the commodity bull run that we would expect late in a business cycle, because normally materials and energy are some of the late cycle areas that really start to accelerate. If that's not going to happen, that would be a really big deal to me. And being aware of the rotation in the market is a big problem. So the thing that I'm watching the closest right now, I'm frustrated because oil's at near highs, but the oil stocks, only 30% of them are on a buy signal. Gold stocks, gold is trying to get to new 5-year highs here, and the gold stocks are not. Copper stocks are holding up better than the other stocks, but they're not doing as well as the price of copper. And now it looks to me like copper is topping. So all of these effects from the currency are starting to show up in the broader market. And even if we go look at, we just grab coal and steel. Steel has been in the news this week for being, the tariff discussion and all that kind of stuff. But what we actually had even before the tariff discussion started was a double top structure setting up here in steel, and we're still in the top right hand corner, so it's too early to call anything. But the steel stocks struggled towards the end of the week, and here we have the coal ETF, which you need coal to melt iron ore into steel. And so what happens is we're now below the 10-week moving average for the first time, really going back to July of last summer. And so considering this should be so bullish for melting more steel, the market's not responding that way. And going across some of the others like lithium and things like that, lithium has broken its uptrend line. So for all the talk about electric cars, all of a sudden this is, new 9-month lows in here. And this week bouncing a little bit, so at least it's starting to bounce, but it's not good when it traps on the bottom side of the 50-period moving average, or the 10-week in this case. And then rare earth metals have done the same thing. They've broken out to the bottom side. So in general, the whole commodity complex is a problem. And it hasn't... it's not bearish yet, but it's definitely not as bullish as everything else should be, considering that we're breaking into the last half. So with that, I want to focus on the parts of the market that are working. And for a long time, we were trying to focus on where the puck is moving. And that's a hockey phrase for saying don't play it where it is, look for where it's going. And we want to do the same thing in the market. So one of the ways to do that is if the business cycle is going to be performing well, we want to be aware of what ETFs are starting to lead the market higher. And so what I've done is I've put together a small list of all of the ETFs. Actually, I think this one might even be from Arthur, but I've got 425 ETFs in this list. And what it is it's a list of all of the major ETFs to give us an indication of the overall market. When we look at the market, one of the keys is to be aware of which ETFs are starting to accelerate higher. And so, you can manually go through and try to find all these, or you could work through the scooter list. I would encourage you to do that. But one of the easy ways to do, and this will really be simple, or I'll show it, and then you'll get an idea how simple this can be. What we want to look for is a stock. We want to look for some volume that's whatever. You can pick a number, 100,000 shares or higher or whatever. And then this month's high is greater than last month's max. And by using this month's high and not this month's current close, but this month's high and the last maximum of 12 months, is what you're going to find is any stock that in the first 9 days of March have broken out to a new high, and it could have pulled back since then, it's still going to bring those stocks up for you. So by doing this and running this scan, um, we can just take this information and look at an ETF list. So let's just view it in summary mode. First of all, what we see in summary mode is this is how many stocks have broken out to a new high, or how many ETFs have broken out to a new high this month. And actually, I need to check one thing on my scan. Yeah, I probably should take this line out. Okay, and one of the ways to take a line out very quickly is to just put comment bars in front of it. Let me run this scan again and just make sure. Okay, so here's our scan results, and we get 24 entries. It looks like roughly the same, so that didn't kick anything out. We're going to replace an existing chart list, and I have a list of 10 scans that I dump stuff into, and so it doesn't really matter what the name is. I just want to remember what it is. So I've made a whole bunch of funny stuff. Here's Dire Straits and Full Stochastics Canada, or George, John, Martin, Greg, whatever. You can make them whatever you want. Just find a name that you can remember. Anyway, I'm going to put these into scanning below 25. Not that that's what we've done, but we're just going to put them in there. And now they're ranked according to Scooter ranking, and what you see here is there's a few Treasury bond ETFs. Those are really down in the dark, but they're starting to make new 3-month highs. So here's your bond ETF, and these are on the bottom end, but look at what's shining at the top, and just being aware of this at any given time is going to help you. So it's internet, semiconductor, technology, there's one regional banking, but even I heard a stat yesterday, Facebook has 24% less viewership than it did a year ago, I think, and 9% less on Instagram, and yet here's the social ETF still flying. This hack ETF is starting to move. And, here's the banking. So basically, it's banks and technology. Some of these Dorsey Wright focus ETFs try to find the fastest relative strength stuff and push it to the top. For a long time, this relative strength one underperformed, but it's now starting to perform pretty well. And so all of these ETFs are sitting in here. And my big point is, as much as I like to invest in commodities, if they're not going anywhere, I need to look elsewhere. And these are the ones that are really starting to move. So just clicking on here and sliding over, let's just look 10 per page, and I haven't sorted them by order. If you're interested in learning how to sort your chart lists, it's very easy to do. I put a video up on the Vimeo channel, the Greg Schnell Vimeo channel, working with industry chart lists. But what you want to do in there is you want to click on summary. You want to sort it by Scooter or some number, whatever. You want to sort it by percentage change. And then you just scroll down to the bottom and hit number in sorted order. It's that easy. And now these will show up in the order of strongest to weakest. So we go grab that and we go to 10 per page. And, this internet index fund is clearly taking off. Look at the volume hitting it as it breaks out to new highs. So this is working really, really well. Now, whether or not it broke to new highs on Friday is not as important. It had to make a new high earlier in the month. Now, these are just all of the technology took off on Friday, so it's still probably going to show a lot of these that had a Friday close. I'll show it to you on other scan lists as well. But here's the semiconductors breaking out to new highs. The AlphaDex fund, this is just technology, breaking out to new highs. Here's Vanet semiconductors, tech and software breaking out to new highs. So clearly this is the area of the market that even after pulling back, it wants to be strong and is ready to move. So it's something more like that I'm, that if you want to try and find strong stocks, you're going to have to be in the strong sectors. And as much as commodities were starting to perform, I'm really worried that they're not going to. And so we're not going to focus much on commodities here. Regional banking ETF just broke out to new highs as well, so that's very bullish. This is the one that I think is interesting, Hack. It really didn't do much until December and started to kick up in December, and now it's really taking off. But Palo Alto had good numbers, and again, there's lots of room in these stocks to run a long, long way. So with that, those are just some of the ideas of things that are working well. So banks, and we've seen them work well. Obviously, the jobs number was pretty good, that kind of thing. So this is a very simple scan. Again, let me just walk through the lines of code again. Anywhere that this is slashed out, it's not looking at that line. So all I did was I went and said, go look at my ETF listing. And the way you do that is you go down here and you choose your chart list, and whatever your chart list name is. So here's Arthur Hill's Market in a Nutshell chart pack, so you could go grab that or whatever you want, but have a list of all the top ETFs, and you can get Arthur's chart list in your account anytime you want. And maybe I should just show you how to do that if you don't know. You go to your account, and I think in here, it'll go and it'll grab all of these chart packs, and you just go manage chart packs, and it'll pull up whatever you want. So anyway, with that, that just gives you an idea to how go do that. Okay. Now here we have, so let's go back and look at this technical scan. Again, you're just going to pick from the list here. These are chart lists that you had defined before, and it's very simple. But the important line here is, so you can either scan inside a chart list, or you can scan the overall broad market. But let's just pick something here. So here is, and this month's high is greater than last month's high for the last 12 months, and you just want to pick the high. So what it's going to say is, if an intraday high this month was higher than any time in the last 12 months, give me that list. So anywhere from the 1st to the 9th of the month so far, if it's higher than it was, then it's going to run this, it's going to show me this scan result. And when we work through these, you could take the S&P 500 list, and so I did a few of these just in advance so that we're not managing our chart lists for the rest of the show. But if we take these, and I think I put the, might have to go look to just see where I put those. This is a bunch of different stocks. But if we look in here, all of these stocks are shooting to new highs, and this is a good list of stuff breaking out. So here's the innovation ETF. This thing has been on fire from 22 to 44. It's a double, and it's continuing higher. Look at the scooter ranking, just continuing to soar. Here's Fate Therapeutics. This one recently broke out, obviously something good going on in the stock. We've talked about Twitter on the Market Watchers Live show at noon. And then here's Seagate breaking out to new highs. Here's a good example. So on Friday, the market, this stock closed down here, but you could see it had a big push to the upside and then a pullback. Well, normally that can be somewhat bearish. We just saw that same thing on Shopify, and it just continued to soar. So, don't be too worried about one candle. I would say I don't like the lower MACD on this one, but as you look through here, again, these made highs earlier in the week, and now they show up on the scan. So, if you're looking for a simple scan to run that will catch some of the highs in the last little period, using this monthly scan instead is going to work just fine. So this one made a new high on the 1st of the month, pulled back quite hard. Quite frankly, it looks like a great place to start getting into it. It's just started to turn back up again, and it looks a little bit better. And I really like the fact that it jumped up, pulled back, and is now starting its run, and it's giving you a chance to pick it up at $7 instead of 11. That's a little bit nicer. Anyway, when you look at these stocks, the purpose of running the scan is that you didn't have to get the high on the final day. You could get it anywhere in here. And here's a really interesting one. Oh, this is in India, but you could just see here's a new 12-month breakout, consolidating. Interesting stuff. So with these, and you can see the scooter ranking taking off up here. Now, these all have scooters of 95. If we went to somewhere farther down the chart list, then I apologize for the scroll. Um, you know, how do you find these stocks? Well, look at the scooter when they start to break in this top 75. It's not going to work every time, but every one of these stocks we've sorted in the order by scooter and the SCTR ranking, and they're up in the 90s here. This is just a list of strong stocks that you can find, and again, if it broke out sometime in the last week, it would be great. Now you could probably find, if we went farther down the list and found stocks with a scooter ranking around 75 instead. Let's just go find a number for that. Okay, here we go. So here's in the 70s and 80s. And if we go look in this area of be page 28 of that scan list, we can go click on this stock. And again, we've sorted them by sort order, but this one is still performing pretty well. Let's just look through and see if we find some other ones. This is in London. I could have limited it to the US. Here's Lululemon. So, consolidating for 3 months here. Can it break out to the upside? Great question. I just think that there's some really good stocks here to start looking at. Here's one making new 3-month highs on Friday, but it's been a relatively strong stock working its way up. So it's that kind of thing that you can grab. Okay. The important thing about this is, how do you remember this code? And I want to point you to some of the scan documents that are on stock charts. And this is really simple stuff, but if you don't have the phrasing right, it doesn't work. So you can do this monthly low is less than last month's low, or you can do this monthly high is greater than last month's high. That's going to show you a stock that's at a 2-month high. Cool. That might give you more than enough. You might want to find a stock that's, moved above its 200-day this month. So the monthly, on a monthly chart, it crossed above the 10-month moving average this month. And so these simple phrasings in here are pretty important, but the easiest way to find all that, and let's just go here, is to go to the scan engine, or just type in the word scan, and you're going to get all of these different pages: scan tutorials, scan syntax reference, which is the page that we're currently in here to find those dates and stuff. But this tells you how to write it. Then there's all these predefined scans, getting help with scans, troubleshooting. Just type in the word scan and you'll get more than enough information to help you find any problem you're having. And I really think, I don't like to write 20 lines of code. So I use something simple like this, and it's at least going to point out the strong stocks. When you run these scans, the second component to that is taking, in this case, I've stopped. I said, let's go look at the S&P 500. And so what I would do is I would turn that one on and then just use these 2 slashes, and then it will ignore what's ever on this line here. So it's going to look, and my favorites list is 183, and the name of that is 10007, S&P 500. So when we run that scan, just go to the scan results. We have 79 stocks out of the S&P 500 hitting new highs. We want to sort them by scooter ranking, and we just want to replace an existing chart list with these results. And we're going to pick whatever, scanning Martin, and putting it in here. And by preserving the sort order, it's going to have the numbers on the front here. And so Netflix is currently the top stock. There was news that Barack Obama was having a Netflix show, and it surged on the news. But these stocks, we had pointed out Micron a couple of weeks ago on Don't Ignore This Chart. It's been a stud since then. It's just taken off to the upside. But here's 20% of the S&P 500 that are making new highs, all on one list. They didn't have to make new highs today, but they've had to make new highs in the last, anytime in March. And so here's Tapestry. That's the old Coach and Michael Kors. This looks like a new uptrend. This thing is happily rolling along. Anyway, so I just want to get into, you don't have to scan for, PPO turning up and scooter ranking between X and X. A lot of times you just want to look for strong stocks and just quickly scroll through the list. Here's Seagate breaking out to new highs. Let's go to page 2, and the only reason I want to do that is just to try and find some stocks that are obviously haven't been in the news as much. Here's the CME group. Those exchanges are doing pretty well, I think. Here's IDEX Labs. This looks really nice. Huge consolidation, shot up, turned back, and now starting to take on new highs again. That looks good. Progressive, I think that's the insurance company, and Flow keeps us watching. Cintas is moving up really high. Bank of America breaking out to new highs. Warren Buffett's happy. MasterCard, this was a 6-week push to new highs on Friday. HPQ, we all wondered if this stock was how it was going to handle the breaking up of the two companies. It's pushing to new highs, $24 stock, nice place to enter. ANSYS, and so my point would be just go look in here, but I like to find them when the scooter ranking is around 75, because usually they're just breaking out of a base. It's more like this. So they were sitting down here, break out to a new high, and then the thing is off and running. Anyway, to do that, just go look a little farther down the list, because we sorted them by scooter, and here we are. This one's got a ranking of 84.6. This one's just starting its breakout. Booking Holdings, Express Scripts had a wild move yesterday, pulled back. Maybe you get a chance to buy it. It's pretty choppy in here. But this upthrust, I really like when you get the original surge pullback, and now it starts to resume its climb. Look at the volume that came in yesterday. I didn't hear the news on that, or on Thursday. Here's Illumina. This is moving higher. Anyway, my point would be that there's lots of simple ways to go look at the market, and we want to stay bullish because we're breaking out to new highs. The other thing to point out is, here's Edwards Life Sciences. Remember how rough the market was in February. This barely even pulled back and just kept on going. So when you can look at the stocks through that period, and they really didn't come down and test the lows like the S&P did, or the 200-day moving average, that's really bullish. And here's Northern Trust. It looks like it wants to move higher after consolidating. Moody's. Anyway, hopefully there's some ideas there. Now, the second thing I wanted to talk about specifically was biotechs and pharma. And one of the reasons is they're difficult to play or to invest in. And the reason they're difficult is because they're so volatile. But if you just keep track of all of the biotechs moving to new 12-month highs, and at least have that list with you, it's going to make it much easier. So we take this, we run our scan results. There's 51 breaking out to new highs. Again, sort them by scooter ranking, and then replace an existing chart list. These are all just scans that I've got. It doesn't matter to me what's in them. You just dump on top of them, and then preserve the sort order and say, okay, so we're going to go in and check out these scans. Now we can do it by percentage change. We can set it up. So let's just see over 1 week. Here's some of the ones really flying. This is a small stocks. It's up 66% in a week. And scooter ranking at 99. Obviously, they came out with some nice stuff, but you don't have to play that risky side of it. You can literally just go look at 10 per page. Let's go back and try and find some of the ones that are with a scooter ranking around 75. Oh, this is even before some of these stocks are so new they don't have scooter rankings, but these are breaking out to new 52-week highs. They're, it's the kind of thing that you want to be aware of. And I really like this, actually. This one breaks out, consolidates, breaks out. And now the consolidations are getting smaller. If you start to watch things like NVIDIA, it did the same sort of thing. And if we just go grab an NVIDIA chart, on NVIDIA. So this one consolidated sideways for 4 or 5 months, then ran up, and now the consolidation here was only 2 months. It just keeps rolling. And so anyway, I think these are important ways to look into the market and try and find the stocks that are starting to get going. And if you're not used to working in the biotech space or whatever, I don't know anything about any of these biotechs, but I can see an uptrend from bottom left to top right, and that tells me investors are still interested in the stock. Here's one that's been building a huge base and just starting to show interest. Doesn't mean it's going to work out. Maybe you put a small position on it, and if this thing starts to really move, you can add to it as it starts to break out. This looks pretty good. 18-month highs, and you're starting to push up. Okay, so hopefully I've covered off how to do that scanning. If anybody had any questions about any of that, please let me know on the chat room, and I will just try to cover those off before we end. But the next component I want to get to is I have a phrase that the U.S. market isn't usually the first to break down. It's usually one of the last. And so I like to look at the rest of the world and see what's going on there. And what you see here is, the DAX on the monthly chart broke out to new highs, pulled back, and is now testing, trying to get back above there. We do have a negative divergence on the MACD, and just, this is a 10-year chart. When the MACD is topping out at a really high level on any of these, it's a pretty good clue that something might not go well for the next little while. And so having Europe be a little bit weaker is not that bullish. And well, it looks so easy on the chart to just go say that, you're living with 6 months of sideways, and the meanwhile this thing is rolling over. Just because it gave you a sell signal mid-June doesn't mean it's going to do anything mid-June. It might take till September or October to do it. The French market has broken, the German market has broken the weekly PPO, which for me is a very bearish signal. It's below zero. It's making lower lows and lower highs in momentum, and it's building this head and shoulders formation. One of the things that I notice that you get from the market like this is when Germany starts to make a right shoulder, that's more likely when the US market would make a final high. And that's not a rule, but it's something to look for. When the rest of the world is starting to make head and shoulders, tops all over the place, you could probably look for the US market to be making a final high. And we're not getting that condition yet. Now, again, we don't have any right shoulders forming on these head and shoulders. So far, the most recent high was still the highest high. The French market is up against this 15-year resistance line. It's rolled right over. Hasn't quite crossed yet this month, so we'll see how March ends up. Can it bounce enough to stop that momentum from rolling over? Great question. We'll have to see. There we were. Okay. So with all of that, I think what we want to know, from the perspective of the rest of the world, here's the French market. I would say left shoulder, head, and is it going to build a right shoulder? That would be the question. I don't like a weekly PPO below zero, and you can just go back 10 years and look, 20 years and look. Anytime it's below zero, you're in rough water, and we're there this week. So it adds more concern that eventually the U.S. market might top out. But until that, if you're staying with strong stocks that might not follow the index, that Edwards Life Sciences was an example, we'll get a great push out of there on really strong stocks. And again, unless the whole world is melting down into some horrific place, we'll get time to get out of the market if that was going to happen. I don't feel like that's what's going on. I just feel like the move that should have happened to commodities might not be happening. And so we should probably be more aware that there's potential for worldwide weakness to start setting in. Okay, let's go look at the Shanghai. And again, this is called the market outlook. So I'm trying not to be so today specific, but more big picture. And you could see that the Shanghai here zoomed in. This was obviously a horrific week when the U.S. market fell as well. It came down and it's now below its 40-week moving average and trying to get back through it. But we've already pulled down the 50 period, or the 10-week moving average, and we've broken this uptrend line. The weekly MACD is below zero or touching zero, so it's a point of concern. Now, again, it can bounce from there. Always a good place to watch, but being aware of how many markets are starting to have negative MACDs or negative PPOs is a really good clue to global weakness. Okay, here's the Hang Seng. I don't see anything wrong with that chart, with the exception that this trend line on the PPO is breaking. That would be a concern to me, to be aware of, that there's a potential for trend change here. And if it was, we'd have a left shoulder ahead and probably build a right shoulder. Maybe that's what this is. But if we're going to start getting those sorts of breakdowns, then I would be more concerned for the US market. So I want to stay in tune with what's going on in the rest of the world, not necessarily invest in the rest of the world. And here we have the Nikkei, and it's clearly broken this 2-year uptrend line in momentum. I don't know how many people watching are familiar with the momentum lines, but when you, and I wrote about it in the book, when you can draw a line under all of these momentum lines and they start to break, it's an important place to be aware of. And when they go negative, you really, should be attuned to the possibility that the market's actually getting weaker. So here's the Nikkei, and again, it's been a horse lately. It ran from 15,000 in 2016 to 24,000, so it's up, 60% or something. That's a pretty good move. What is that? 8,000 on 16, yeah. So 50% from almost 2 years ago. So similar to the U.S. market. And then, but this big move up suggests, lots of horsepower here. But the momentum rolling over, putting in a similar high, that's a bit concerning, but nothing really damaging. And then here you can see that you had a lot lower high in momentum, and price started to go, or the momentum went negative here, and that was a pretty good signal to be aware of. And it was also a trend break on the big uptrend. Well, here we have a trend break on the uptrend. We have a momentum break, and we're still above zero. But, the markets, that chart is starting to look shaky-er. Australia, again, some of these commodity countries, if you follow the commodity countdown, and I will do a new commodity countdown tomorrow. I was traveling on Thursday, so I didn't put one out other than that working with industry chart lists video. Australia, what you see here is, the market is climbing up, broke out, and is now just consolidating in this area, but it is also up against this 10-year resistance line in momentum, and a breakout would be very, very bullish. We saw that on the Japan chart just before this. But at this point, there's nothing terribly scary about this chart other than the weekly momentum is negative. So it's below its signal line, and it hasn't fallen below zero yet. But I would really be watching this uptrend line and just seeing what happens. If Australia starts to break down, obviously that's going to put more pressure on commodities worldwide, and Canada's already weak. I think we're at, we made new 52-week lows here in February, so that's pretty weak. Markets, the MACD rolled over after pulling back hard. Now we're right at the zero level, and it looks like we're trying to bounce a little bit. The real question is, can we accelerate back up like we did here? That would be very bullish. But we did get a bear market signal on the chart, which is the RSI on a weekly chart, goes down and touches the 30 level. And when that happens, it just means there's not enough buying support to hold the market up. Okay. Brazil and Russia still look good, which is much more bullish statement for commodities. So their MACD is still hitting a new high. Price hit a new high just a week ago. So everything is in line on that chart. Russia, I'm just putting these other ones into context, and then I'll show you the US, and hopefully that will add clarity. We have this big uptrend in Russia, consolidating basically since the beginning of the year. No real problem with that. That's what the US market did too. It pulled back, and now it's starting to break back out to new highs. We do have one issue here, and that is a little bit lower high with a higher high in price. And we have a momentum trend line that's accelerated a little bit. I still think just being aware of this big long-term one is probably a better line to watch. So Russia still looks good. And if we go to the S&P now, you'll get a feel just for how their momentum lines are playing. So what we see here is the big uptrend is still holding. We're bouncing, turning back up here in the zoom box above zero or above the trend line, and it looks like it wants to accelerate higher. So I'm not nearly as bearish on the US as I am on some of the other markets because of the head and shoulders that they're starting to set up. What we see here in 2015 was when the trend line broke. You know, that was a pretty major place, and here we had this short trend line, and that kind of gapped everything down. But look at how the MACD momentum was waning for years, and it didn't matter. Well, don't forget that all of this period in here, 2013, 2014, was all QE. So the Fed was on the gas pedal instead of on the brake, and that might make a bit of a difference. So at this point, we've got an uptrend going on for 2 years, and as long as that uptrend holds in momentum, I'd be happy. If it starts to make a lower high in momentum like it did in here, that would be a little bit more worrying. But again, it just told you that the market, there was really not much money to be made through that period on the S&P, and then all of a sudden the latter half of the year was the real ramp. Looking at the NASDAQ, obviously it's the 800-pound gorilla. It just keeps pushing higher and higher. And so there's nothing on this chart that says sell anytime soon. And especially with new highs this week after this little pullback, that was just a great buying opportunity on the 40-week moving average. And things are continuing to push up. Okay, let me just quickly check over here. Gold is dollar denominated was one of the questions. And there's a question, what about nat gas? So we could go look at that. And if you have any other questions, feel free to put them into the chat box for me, and I'll try and cover that off. Okay, so the natural gas chart, it just has been painfully slow to accelerate. So what we were hoping for was more like this, where it would pull back and then springboard higher. Instead, what it's chosen to do is pull back and yawn higher. We do have a downsloping 40-week moving average. That's never good. So in general, we're expecting natural gas to start to rally, but I think the biggest issue we have on the commodities in general is a lack of love from investors across the space. And look at this on this bounce here. Look at how low the volume was. So it doesn't look like there's a lot of strength in people trying to buy this as a rally. So I would be, you know, we'll have to be more cautious on natural gas. That would be an area of weakness that I think is particularly concerning, and probably one of them that, you know, in general, it's not going to help to try and ride these trends if they're just not, you know, setting up with any strength. The whole idea is to get a major move quickly, especially in the commodity space, and those aren't showing up. Okay, can we go over intraday scans? Okay, so we don't have intraday scans, Gerald, but one of the things that I think, so if you use the feature high instead of the close feature, that will help show you new breakouts, things that you want. So let's just go look at the scan again here. If you're looking at scans and you have an area that you want, let's say banking, and there's, I don't know, 8,000 US banks or something, but there's so many that are publicly traded, you can do a couple of things. You can either pick a group. So here you can go down here and pick the banking index or whatever, anything like that. You can go grab a group. Let's say that there's going to be too many. You can do something and say, and bracket SCTR is greater than 50. And the reason for doing that is it's going to get rid of all of the stocks that have a weak SCTR ranking and focus on everything kind of better than average. And that's a pretty important place. So anyway, I would encourage you to look at just trying to use industry groups. Now, I did, so again, maybe let me just pop over to Vimeo, vimeo.com/channels/Greg Schnell. And this video that I just put together, working through industry chart lists, will show you how to go through and work through all these industry chart lists. But the point, I think what's really important as an investor in general is when you're trying to work in the market, you need to have your chart lists all set up, and it's really a work that gets built out over time. So in this case, here's all my bond, currencies, US banks, agriculture, cloud sector charts, coal industry, consumer staples. Let me just zoom in a bit. Oh, it won't do it while I'm there. Okay, and do the drop down now. And so what you see here, what I've done, one of the things I've struggled with is in the industry group, when you're trying to work with them, it's hard to keep them in a naming sequence. So what I've done is I've used a number at the front, then alphabetical, and then put the name in here. And by doing that, so if I want to go to copper mining and it's starting to break out, or we talked about cybersecurity, let's just see how many stocks are in here. 10. Excellent. Let's go grab this, view all, and you can put it in the RRG look. And what that's going to show us is all of the stocks starting to break out to a new high. This is really, really nice. They're all starting to accelerate. Intel has pulled back and looks like it wants to turn back up again. Here's Palo Alto Networks. This is Proofpoint. These stocks are all starting to break out. And so this makes it very easy. And you can highlight over here and just kind of go down the chart list here and just see the shape of all of these. Is there anything in there we don't like to see? Lockheed Martin, not that great. But this is the ETF representing it. It's really broken out just at the beginning of March here, above the January highs. IBM trying to get into blockchain. That one's consolidating sideways. Here's BT Group, British Telecom. And then FireEye, that one's on the move. So I think there's a real opportunity to start looking at some of these and just grabbing the groups. But the important thing is you have to be set up in your group lists before you can make that happen. And that's a really important thing to do. So let's just go back to the technical scan here. And one of the things to remember is that all you have to do here is go in and say, I want to go get all the soft drink companies. And you can make a chart list just by grabbing one of those, or you can grab the whole consumer staple sector at once and bring all of those up. Mike, thanks for the compliment on the book. Appreciate that. I'm getting some really nice feedback. So thank you guys thanks everybody for sending that in. Do I have a view on junk bonds? And with that, we're probably on our last question, but let me just pull up my commodity countdown list that I go through. And in the junk bonds, for people that have been following along with that, it's roughly about halfway. Okay, let me just switch to summary mode and get out of this Zoom. Okay, so here we go with copper, energy. Oh, these are not in order. There we go. Okay, just looking through here to find my junk bonds. There we go. Okay. When I look at bonds, I like to look at them with the underscore. You can see it up here in the ticker box, but if you put the underscore there, it takes the yield out. So whatever dividend it was paying. And obviously the reason to invest in junk bonds is because it would pay a higher dividend. But what we're seeing here is that junk bonds are starting to underperform. And, back in November, we started to notice that. So there is something wrong that people are not willing to buy those riskier bonds, and obviously bonds in general are out of favor right now. So part of it is a statement about bonds, but the other part of it is they're not chasing high yield at all. And if you go back and look in 2014, this started to break down. Now, you'll remember oil broke down in about September. So in around here, junk bonds kind of gave us a clue that something was different, and the stock market topped off in February or May of 2015 was kind of the final high. But in here, you can see that the junk bonds were already giving us a clue. And so again, I would take the foreign markets, if they start to make a head and shoulders top, if the junk bond market keeps getting weaker, that should be a concern. If the railroads start to break down, then that's going to be a concern. But if you're focused in these high performing stocks that are not following, they didn't pull back when the S&P 500 pulled back in February. It gives you a great way to at least add ballast to your portfolio, and if nothing else, then you have time to make better decisions. As you see the broader market weakening, you can either shrink your position size or allocate less capital into the market and have a little more cash on board. Okay, hopefully everybody's had a chance to think about my book. If there's anything in the book that you have questions about, feel free to send me an email message at gregs@stockcharts.com. And if you do that, you'll be able to, I can try and answer those back. But hopefully you find the book helpful for setting up charts. I know a lot of the people with experience that have used the book already found ideas in it that they didn't know. And really that's what it's supposed to be, is helping you set up your charts for success. So with that, I'll wrap it up. Thanks everybody for taking the time to join me. And we look forward to chatting with you through the month of March. Bye-bye.